Good evening, all. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for the evening of Tuesday, the 13th of June, 2023, getting on at 6:20 p.m. Central Time. So today was the big CPI report. We have a two-step dance here. Left foot in, that's the CPI. Right foot out, that's going to be the big boy. That's going to be the FOMC, what they do. And then the hopscotch in the center is going to be the PPI in the morning. So that's what you're going to get tomorrow. So what happened today? Let's take a look and see if you can get this. Just drop to the bottom because this is the key. The May Consumer Price Index was up 4%. That is a nice decline, down 0.9 from what it was last month and right at the expected number. Number two, the May Core ex-food and energy CPI came in at 5.3%. They expected that, and that's down 0.2. So no surprise at all in any manner with what went on here. So the Fed doesn't get to choose from a hot number or a cold number. Now they have to decide what to do. The naysayers were buying, as I said, all day long, stock indices. They tried to break the market a couple of times after the report, but it ended up higher. Tonight, you're giving up in the Dow some numbers. Remember, that's 30 stocks. You can give it up easy. And the hardest thing for people to understand in the S&P is that 7 or 8 stocks make up the whole basket of what this is really worth. And they're the market drivers. Now, the metal markets took it on the chin with the exception of copper. Copper's easy to explain. What's going on now is instead of over the weekend, China started playing games now, and now we come in this morning and we see that overnight they lowered another series of rates. They injected not a terrible amount of money into the banking system, $280 million, but the word is that they're going to do something aggressive for the property market, for possibly taxes, for EVs, mortgages. I don't know what it is. It's just rumblings we're hearing. And with that, the copper was the stellar performer, up about 7 or 8 cents. We'll see that in a minute. The dollar fell today, and I'll go into this in my full description of all this in the financial market update and probably the S&P. I'm doing this one first, and I don't want to do them over and over and over. It's easier for me. We had a good rally, a bounce today in the energies, and think about it. Why not? We're down really hard, so you rally back about $2. What I'm hearing, too, is that the Biden administration has finally said they're looking before year-end to buy about 12 million barrels of oil for the strategic reserve. Of course, as soon as they said that, they gave a bid into the markets, but they were rallying today anyways. Why not? If China is going to be able to spur on the economy, that could create demand for the oil. So that's what went on there. When we take a look at the gold market, the battleground is crystal clear. It's the 18-day average of closes. Now you're under it, but it's only Tuesday. I don't know where the week is going to end up. You're down for the week right now, almost 1%, $17 so far on the last tick basis. When you look at the gold chart, tell me you're not just sideways here, back and forth. Which way is next? Now, if we look at the chart action on the swing line, and this is the swing line, this is a chart right here without the swing line. I love what the swing line does because you get to see where the prior highs and lows are. And by connecting them, you get an idea of, are we trending? And the answer is yes, you have a downtrend. You have lower highs and lower lows. When you put moving averages on, as we were coming up, I gave you all the scenarios the past yesterday and last week that I thought the battle was going to be fought at the 18 and the 100-day averages. If I could get an A in school with 5 stars, I'd have gotten it. That's what's going on. And then I said, if the market collapses from there, far away is the 200-day average, but more likely where the support would come in, if the market drops, and that's what it's trying to do, would be the Bollinger Band. And that number is 1949.80. You hit it actually today at one point, and you came right into it. If you haven't taken my Bollinger Band course, please do so. There's an ad about it at the end of this. It's on our website at iraepstein.com. You're really going to learn. It's 15 video chapters. We give you the software and everything to learn. You learn the importance of when that occurs and what to do. You are oversold into the Bollinger Band. My guess is the pros are covering shorts here. When you look at the gold-silver ratio, it is still staying under the 18-day average, which means that even though there's a bounce, overall silver is acting stronger than gold. And if you come to the chart, I don't know that you could argue that. The market has got a downtrend, but it returned to the 18-day average, nowhere near the Bollinger Band yet. What's really going on is gold and silver have gone into sideways, total sideways action on the Bollinger Bands. Each time you do that, and I can go back and forth on this chart, from there comes the next big move. What is it going to be in this case? Well, tomorrow probably, over the next, I'd say 48 hours, we get our idea. Why? Because when the Fed's going to come out with their decision at 1 o'clock, we're then going to get a chance after that to see the dot plots. We'll hear talk. At 1:30, Fed Chair Powell comes out. He'll be asked all the reporter questions, and it's going to be a wild meeting. If they go and they do a skip, he's got to explain that in detail. Is he going to sound hawkish or dovish? He has to sound hawkish if he doesn't want to lose credibility. He generally doesn't sound too hawkish. That's going to be the problem for him. If he goes with the 25 basis point hike, then he has to explain that there's time. If the market warrants it, he'll back off. Right now, the probability of going with the skip, that's what I want to call it, because that's what they're calling it right now, is like in the 93, 94 percentile if you go to the CME Fed Watch page. I am still of the opinion, even knowing that, they should go with 25 basis points because you haven't broken the back of the core CPI. It is not falling with the velocity that you see in the headline. Headline CPI moves all over the board. It gets normal, and then if energy prices go up, it's taken off from there. Food prices can move it one way or the other. El Nino events can move it. The core is a whole different animal, and that is what bothers me, that I don't think people understand that you've got to really beat that animal down, and at 0.2 a month, you're not going to get the job done very well. In the copper market, this is about, again, what China's trying to do. And now you keep hitting the Bollinger Bands and you keep getting thrown back. You are pushing them out, and that's good. Now, are we going to embed? It takes, in order to embed, 3 days where the markets stay over 80. You can't count tonight because we don't know we're going to finish. You're not going to have it, though. This is day one yesterday, and the day before, you didn't have it. So you have an overbought market where I think the pros are taking positions off, buying on the breaks, maybe even buying the 200-day average. I wouldn't recommend it in an overbought market, but some are, and popping back and forth right there. If China, whatever the package they come out with, isn't good enough, the market will punish this market. Will the market accept what they're saying? The biggest problem for China is consumer spending. The consumer is not buying things. He's holding on to his money. They've tried to take away the deposits in terms of interest paid on deposits to get and nudge him to do more. Now they're going to throw tax breaks, more maybe electric vehicle breaks, mortgage breaks, try to throw things to get that consumer to do things to spur the economy on, because the world demand from China isn't there right now. When you look at the platinum market, you can see you're building a bearish embedded reading. The market now is fighting between the 200-day average and the lower Bollinger Band. Each time we have rallied recently up to that red line, I call it the line in the sand, but it's the 18-day moving average of closes, you've failed, and that keeps the bias of the market down, which is just where you're at. We then get to the dollar index. So if the Fed is going to skip, the dollar should break, and that's pretty much what's happening. The weird thing today, and I'll talk about this in a minute when we get over into the financial markets, is that interest rate yields actually went up pretty good today. Something's not matching. If the yields are going up, it's almost saying the Fed's going to go 25 basis points more. They didn't slightly go up. They moved fairly large today. Interesting day, so we'll talk about that. And that's where I'm taking you. I want to get you to the point where you understand a lot of this and understand the importance of these Bollinger Bands, because it's every day that you're going to see them on your chart. And one of the markets you're looking at inevitably is going to hit the upper and lower band. How do you work with it? You have an edge over people that don't understand it. You have an edge with the momentum. I give you that edge. What you do with it? Well, I can only teach you what I think you should do with it. You do with it as you want. And of course, you can twist and turn it any way you want. How do you learn this? It's simple. You click on right here, right up there. You'll see an icon. You can go to our website at iraepstein.com under education. You're your own best tool. You're your own best asset. Invest in yourself. I'm Ira. I'll see you tomorrow.